Hello everyone, this is the 13th episode of my 2026 Portfolio Challenge series where I try to beat the market by testing 4 strategies that range from sensible to slightly unhinged. Each of these started out with $100,000 and currently only one of them is beating the market, the deep value. As you can see, the entire market is down big the past couple of months, and my portfolios are no exception. Disclaimer, this is for entertainment and educational purposes only. I am not a financial advisor and this is not financial advice. This is all done on a paper trading account and these are all simulated trades with no real capital at risk. So in today's itinerary, I just want to go over some of my portfolios' performances. I did make changes, so this is wrong. Some watch list news, so GameStop had earnings. Robinhood decided they want to have a buyback of $1.5 billion. Micron and SanDisk are down due to Google's TurboQuant. And then I sold some of my Celsius for memory, which is Micron and SanDisk. And I want to be talking about how I'll be adjusting my positions in the meme stock portfolio moving forward. And finally, we'll talk about ELF. So here's my 2026 main portfolio holdings. This is my gut feelings, some value picks, high IV, so volatile stocks, and high conviction plays. So Micron and SanDisk are the highest IV, they're very value picks, and they're my highest conviction. So I sold Celsius and bought more Micron and SanDisk here. This was last week, this is this week. And here's my total earnings for each of the portfolios. So this is just my 2026 main one so far. And as you can tell, Celsius and Robinhood are killing me right now, but the rest aren't helping much either. Then my deep value portfolio, so this is just a pure forward PE play with some guardrails regarding how big the company is, market cap and stuff like that. And not much change here. I did buy Micron here, but the cash, yeah, just bought Micron. And here's my profits and losses for the deep value portfolio. I need to exit FANG because my profit target is 2,000 each. I start positions with only 10,000 here. And these are all down pretty bad, so we'll see. And my choice value portfolio, so these are my value picks. So I have my own formula that I use to determine what's a value pick and what's not. It's basically price targets. And this is, again, weighted by my conviction and IV. So Robinhood, I did not sell Robinhood. This is just Robinhood fell significantly from last week. And yeah, basically everything else also fell. And here's my profits and losses. Again, Celsius and Robinhood are starring fantastically here. Very happy with those two. And my meme stock. These are Robinhood call options for 2028 at the 85 strike. And as you can tell, they're performing really well right now, actually. I'm very happy with this so far. So GameStop, they had phenomenal earnings, in my opinion. It wasn't necessarily the revenue and their operating income. So the revenue was actually less good than I thought and less good than last year. But their profit margin increased significantly. And they were talking about some of their acquisitions and some of the moves that they're doing with Bitcoin. So I was very happy with that. And just to show you what was happening there. So just to show you what's going on with GameStop, here we can see that the revenue is less than last year, $180 million. But we can see that despite being down $180 million, we're up $55 million. I think I did that math right. $55 million in operating income, which means that our margins are better. And that doesn't even take into account the Bitcoin moves that GameStop was making. So one of the big things that everybody was talking about regarding the Bitcoin for GameStop was that their Bitcoin was down huge this quarter. People were debating if it was in the mid 70s, low 70s, mid 80s, low 80s. But previous quarter ended at around 106K for the price of Bitcoin. And they're holding 4,710 Bitcoin, which is quite a bit. And everybody saw that they had a sell on Bitcoin. So there was a lot of discussion around that, and what we learned is that they did not sell their Bitcoin. They sold covered calls on their Bitcoin with the $105,000 to $110,000 strike, meaning if it goes above it, they won't profit more than that, but they collected $368 million in cash for that, which is amazing. That's just amazing. Good on Ryan Cohen. I know a lot of people don't like this because it's kind of playing the hedge fund for GameStop, but I personally love this move. It's a very smart hedge, especially considering that they saw probably the writing on the wall that Bitcoin was starting to fall. So I'm very happy with that. And then Robinhood. So I reran the math with some new Wall Street estimates for revenue, and my new price target is 85. I definitely think that they can reach it, and I do hope that they can reach 100, but I'm pretty sure they'll reach 85 again this year. They'll at least touch it. And then I also wanted to talk about their buyback. So $1.5 billion, that's around 3% of their shares outstanding, which is insane. That's a really big buyback right there. That's like 27 million shares. That's off the top of my head, so it's probably not accurate. But that's a really big buyback. And I think that shows that they're very optimistic about themselves. And also, I just want to talk about how I think that this drop is a bit too much. I'll pull up Bitcoin and Robinhood just to show you what's going on there. So here we can see Bitcoin over the past basically year. And you can see that Robinhood, here I'll move it to Robinhood. Robinhood's basically tracking it perfectly. And I'm not sure why. Because it's only 18% of Robinhood's revenue, and it's getting smaller every quarter. So I'm not sure why it's tracking so well, but Bitcoin, a few whales also popped in, and I'm not sure that it's going to drop under 60, but this does worry me a bit because Robinhood generally is 1/1000th of Bitcoin over the past few months. So if it drops to 60, then Robinhood will go with it for some reason, but that's just how it works. The little optimism I have is that historically, whenever they bought back, it was generally marking before a run. And I know that a run can't really happen right now because oil is insanely high. And for some reason, everybody's just pulling their money out of the markets, even though this is the best time to buy, I think. But I think that, if the war ends with Iran in the next few weeks, I think that this will rebound pretty hard up to 90, 87, 90 area. And using momentum, it might even continue higher, especially with earnings coming up. And generally, earnings is good news for Robinhood, at least for a few days. And it also likes to run up to earnings like 2-3 weeks before it. As you can tell, the past few earnings, it had a run up. It had a run up, and it ran up before. So I do think that it'll have a rebound around earnings. I am optimistic on Robinhood still. But we'll talk about what I'm adjusting in my meme stock portfolio, which is all Robinhood, soon. So how am I adjusting my meme stock portfolio? I currently have, now it's 31 January 28th, $75 calls. And I'm selling roughly at the 20 delta, weekly or bi-weekly calls. So between 10 and 14 days generally. And I'm using those proceeds to buy more calls. So I was at 27 calls when I started this a few weeks ago, and now I'm at 31 calls. And the idea being that if Robinhood stays this low, then I'll just have 70 calls by the end of the year. And hopefully that's profitable. And then if Robinhood stays under 70, I might need to use the premium over 2-3 weeks just to drop my average call price. So I'll do a spread between 75 and 70. And that should be like $400-$500 per call. So that's 2-3 weeks of work just to move the 75 calls to the 70, and then I'll continue buying 70 calls. I hope that makes sense. Then I wanted to talk about Micron, SanDisk, and Google's TurboQuant. So TurboQuant is basically a new algorithm that Google developed that compresses basically the cache, the context, you can say, from AI models. So it compresses it around 6x without loss of information. Meaning it's not the models themselves that are 6 times smaller, but the amount of context that you can use is 6 times smaller. So for example, on my 12 gigabit NVIDIA GPU that I have, some Ada 4000 series, doesn't matter. So I can only run like Qwen 3.5, 3 billion or 7 billion parameters, and that takes up between 5 and 9 gigabytes of RAM. So that doesn't leave much room. I think I can get like 10,000 context window when I run that. So Using this, I should be able to get 60,000, so 6x. But that doesn't mean that we need less RAM. That just means that the memory stored on the context is less. So we can store more context, but the context is moving and increasing exponentially. So I'm not worried about Micron and SanDisk. I think the market way overreacted to this, especially with the growth of AI models, and Google and Anthropic. They're all just going insane right now with their Gemini, and I just saw Claude released a Mythos 5.0 or whatever they want to call it. So I don't see this going away anytime soon. And moreover, both Micron and SanDisk have their deals written out already for the next 2 to 3 years, right? 2 to 3 years ahead, they already know what their income is going to be, what their revenue is going to be. So even if this is a memory cycle, like people say it is, it's going to last at least 3 to 4 years. So people are discounting it as if it's a cycle and it's going to go back down. But to be honest, I don't see that happening anytime soon, especially now with the way AI is moving. Then what happened with Celsius in my main portfolio? So I only sold it in the main portfolio. And so what happened was that Celsius hit 35 and I saw that Micron was at 350. So I took a look and my Celsius price target is 50, my Micron is 850. And doing the quick math, you can see that Micron looked much better. And it's also more volatile and it generally likes to move up even to 450. So we'll see how I play it. But in my mind, it was a no-brainer just to move the Celsius to the Micron. I know that that's de-diversifying, but honestly, with my conviction in Micron, this was a no-brainer, and I'd rather be wrong and this being stuck at 450 and this hitting 500 like it always does. Micron hit 450 4 times in the past 4 weeks. So I'd rather be wrong about that than be stuck with Celsius dropping to 20. And then ELF dropped to 61 recently, and my price target was 90. When we started the challenge, ELF was at 67, and I said it was going up to 90, and it did. And now it's at 61, and I'm 100% certain that it's going back up to 90 this year. So I need to find a way to incorporate it. This is not financial advice, obviously. This is my paper money that I'm using, but I am very certain about ELF. They have fantastic management, and I understand why it's dropping, because oil is down or is up to 101, and ELF is a makeup company, so most of their products have oil in them. Petroleum, lipstick, gloss, all that stuff, it carries petroleum. So with high prices, obviously ELF will drop because they're taking into account lower margins. But with the way that Trump's talking and he wants to end this war, I don't think oil is going to stay up this long. Even if it has some lasting effects, it'll drop to 80 or 70. So, I mean, that's a 20% decrease. I can easily see ELF jumping 20, 30% the second the war ends. And it's got 50% left to go up to 90. So I'm going to find a way to buy ELF. It might be selling Meta. It might be selling something else, but I will be going into ELF. So that's it for today. Thank you guys for listening. I'll see you guys next week, and good luck this week. Bye-bye.